All right, very good. Yeah, we're live. Hi, everyone. I think our YouTube livecast has just started, but we are waiting for a couple more panel members. Hi, everyone. I think our YouTube livecast has just started, but we are waiting for a couple more panel members. Hi, everyone. I think our YouTube livecast has just started, but we are waiting for a couple more. Okay, I will start now. Yes, I see that Tony has just joined as well as Martin. Hi.
Hi, guys.
Martin, how are you, everyone? Welcome to the Open Business Council Summit, and welcome to our session on the Fintech ecosystem. I'll just go through the format of today's 1 hour panel session. Which will be my introduction of the panel members, a short introduction of the panel members, followed by an allocation of about 5 minutes to each panel member to talk about their business platform and, specifically how it relates to the fintech ecosystem. After which we can have some follow-up questions, some Q&A for the remainder of the session. I'm your moderator. My name is Asad Sultan. I'm in Kuala Lumpur, Malaysia. A little bit about myself. I am CEO of a company called Deutsche Malaysian Ventures. It's a venture building platform around the 4IR technology space, specifically in fintech and digital asset exchanges. I used to be a banker before that for my sins. Started with Citibank in New York and then Tokyo, then London, Hong Kong. And I spent most of my career with Australia's Macquarie Bank. But I've been a techpreneur and entrepreneur for the last dozen years now. So even though I look very young, I've gone through many different phases of career life. Maybe I don't look so young anymore, who knows. Okay, let me introduce our panel members. We have with us today Mr. Tony Horrell. He's the chairman and CEO of Cranium Ventures. Mr. Martin Sainier, he's the managing director of Smart MoneyMatch. Namir Khan from Dubai. He's the founding board member of MENA Fintech Association. Zan Varmuza, CEO and founder of Aureus Ventures. And Michael Healy, co-founder of Unit.Ventures. Let me start with a quick bio background of each gentleman on the call. And then I'll hand it over to each of you individually to talk about your businesses. Tony is a recognized thought leader in payments and fintech innovation. He's got 30 years in the financial technology and payment sector. He was senior management in various multinational roles, founder of 3 fintech startups, including one listing in the United States. He has a massive experience in structure, strategy, product design, deployment on a global scale. And I can definitely vouch for the last bit of his short bio. He's multicultural, speaks 5 languages, and lived and worked in 10 countries across 3 continents. And I can say that I know Tony personally. I'm very privileged that for at least during the course of 2020, while we've all been locked down in COVID, he's been a resident of Malaysia as well. So we spent plenty of time diverting each other during this period and entertaining each other. Thank you, Tony, for joining today. Martin Sainier, he's the managing director, Smart MoneyMatch. Martin has a master's degree in quantitative finance. from the economic faculty of University of Zurich. Prior to his activity founding Smart MoneyMatch, he was responsible for market risk management of the Clarendon Bank. And besides his activity with Smart MoneyMatch, Martin also is an active university lecturer and author of several publications. He was born in Zug, speaks German, English, French, and Spanish, like every good Swiss citizen, I think. And his hobbies are golf and cycling and tennis, chess, and music. Next is Mr. Namir Khan. Namir is a dynamic leader in the insurance industry with expertise in information technology, media, and logistics. He passionately believes in creating the future using technology for social good. I think, Namir, you'll find that you have some common ground with Michael as well in that regard. Namir has been successfully shortlisted for the Harvard Business School and is currently working on HBS's case research group on developing studies in the Islamic finance sector. Zan Varmuza is the CEO and founder of Aureus Ventures. Zan is a multipreneur. I like that word. I'm going to use that, Zan, with your permission, who has founded multiple startups, including Sportside, for which he raised 15 million. Zan's passion is for developing entrepreneurs and startups, and Aureus Ventures develops startups from idea conception, development of the tech, launch, scaling, and investment raising, establishing the startup as a leader in their field. Aureus Venture was recently voted as one of the top 100 London startups 2 months after launch, with a number of innovative startups within its current portfolio. Zan was educated at Eton and the University of St. Andrews and has an international entrepreneurial career spanning Africa, China, North America, and hopefully Asia. Zan, we'll get you out back to Malaysia at some point. And finally, last but not least, we have Michael Healy, who I know personally. He's the co-founder of Unit.Ventures. Unit.Ventures is focused on communities, marketplaces, and tokens. Michael is very much focused on social impact and positive change through education, entrepreneurship, and empowering individuals. He's built several successful businesses with exits ranging from ChatRide and encrypted peer-to-peer video conferencing technology, RateMash, once one of the UK's largest student social networks, and WikiLeaks Android app, and many other niche mobile apps used by millions of users worldwide. He was a finalist in the Thiel Fellowship by Peter Thiel and also awarded the silver medal in the Mathematics Olympiad. Michael has served as entrepreneur in residence at top pan-European venture capital company Wellington Partners, and he's done work for many of the large tech and other sort of MNCs, including Google, KPMG, etc. So that's the quick background of our panelists. I thank you very much for joining us and taking time. Let's start with a quick, let's start with a sort of 5-minute discussion of each of your platforms so that our attendees can familiarize yourself with your activity, specifically, if you will, relating to the fintech ecosystem, which is the theme of our panel today. Maybe we can start from the back front. We start with Michael, who I just introduced. Michael, can you talk a bit about Unit.Ventures, and let's go on from there. Thank you. And by the way, as everyone speaks, please put your mic on mute so that there's no background noise. Thanks very much.
Definitely. Thanks so much for the kind introduction, Asad. So with Unit and Unit.Ventures, we're building and investing in marketplaces. So two-sided marketplaces like Airbnb or Uber, where we basically connect providers and customers. So if you look at Airbnb, it's really transformed the short-term accommodation space, people with like a room and people looking for a place to stay. Like it bridges gap between hosts and customers. And if you look at Uber, it connected people looking to drive a taxi and people looking to ride a car. And there's so many other industries which don't really have a leading marketplace like Airbnb or Uber. And basically with Unit, we're focused on powering the technology as well as investing in building the technology for these marketplaces. We're also very passionate about tokens, where if you look at the example of Airbnb or Uber, Uber went public for $80 billion. It had about 2 million drivers, and that's $40,000 of value for each driver in terms of value created. And all of it went to the founders of those companies and the investors of the companies. None of it went to the drivers or to the customers, and maybe a tiny bit to the employees. And that's why we're really passionate about tokens, because we believe that the future is where the customers and the employees are also stakeholders alongside the founders and the investors. So yeah, in terms of my background, I've been building tech companies the past 12 years. As Asad mentioned, I started one of the top social networks in the UK, ran a video conferencing app like Zoom or like Skype, which had a few million users, which I sold in 2014. Been in the Bitcoin and crypto space since 2010. I built the WikiLeaks app for the Android phone. And yeah, very passionate about the digital asset and digital token space. I strongly believe that this is going to solve the inequity in the world. At the moment, it's really tough to fundraise or to get a return on investments. If like for the majority of the world, if you don't have a track record, or if you don't have a good network of sort of venture capitalists or angel investors, it's really tough to raise money. And what's been shown in 2017 with tokens and cryptocurrencies is that it's a really interesting way of fundraising. Like ICOs kind of took the world by storm because you had projects which were started by people who didn't really have any experience, and they were able to raise like hundreds of millions of dollars. So it kind of showed like, there's something really interesting there. Unfortunately, if you look at 2017, many of these ideas didn't materialize, similar to the early internet with the dot-com bubble. But then, as you saw with the internet, it transformed information. Like it transformed like access to information. If you wanted to learn about something before, you needed to go to a library, or you had to speak to an expert. And then, this amazing thing called the internet produced things like Google or Wikipedia to give access to information. And then things like the mobile phone, it really improved communication. So yeah, in terms of what we're focused on at Unit, it's solving the exchange of value. And we believe that the best way to do that is through the use of tokens. Like the idea that in the future, all of us here would have a portfolio of different tokens, whether it's of people we believe in, of small businesses that we support, or even platforms or businesses that we use on a day-to-day basis. We're also building communities in different cities. So we have active communities in about 30 cities around the world. We're growing this to 200 cities in the next 18 months. We've held talks like this online for tens of thousands of people, and have held like 2,000 meetups and think tanks and events in these 30 cities, which we're scaling up. The marketplaces were growing, as well as like building up this token-driven economy ecosystem, which is built on the thesis of solving inequity and making it fair and evenly distributed. Yeah, thanks so much, Asad, and I'll pass it back to you. Thank you.
Thank you, Michael. Michael also has a wonderful project in Bali, which we could have a whole other session on. And you're back in Bali now, Michael, I believe. So I hope work's going okay with that, and the progress is happening. Look forward to coming and visiting you once it's completed. Next, we have Zan Varmuza. He's the CEO and founder of Aureus Ventures. Zan, I think you're in London. The floor is yours. Tell us a little bit about Aureus Ventures.
Hi, everyone. Great to be here, and thanks, Asad, for moderating this all. Yeah, as Asad said, I exited Sportside, which was a sports app connecting like-minded sports people about 4 or 5 months ago, and I decided to set up Aureus Ventures after doing that to help fellow entrepreneurs and startups like myself had been from a very early stage, sort of conceive their idea, build and develop their product, launch it, and then scale it. And the whole idea came about from all the problems and all the issues and all the advice and guidance that I had whilst on my entrepreneurial journey that a lot of entrepreneurs and a lot of startups don't have. And I was one of those people who networked ferociously. And the number of sort of amazing contacts, the amazing sort of bits of help and advice that I got from it all really showed me how important it was for people just to talk to other people and connect with other people. And if more entrepreneurs and more startups did that, then our entrepreneurial journey would probably be a lot easier and a lot sort of quicker for us all, and we would all avoid making the same mistakes because other people had made them already and helped us not to make them. So Aureus Ventures was founded to help startups and entrepreneurs in their journey. We launched about 2 months ago, and we've already got sort of 5 or 6 really exciting companies within our portfolio that are all very, very early stage. They're idea conception stage, and we've got an in-house tech team as well that will help them build the tech. Again, with the idea that if we know everything from the beginning, it will help the entrepreneur and mean then they're not having to repeat things, which I found was very common with a lot of startups that I had worked with, that they tended to build the tech, raise a bit of money, and then have to build the tech again, and then probably raise a bit more money and have to build the tech again because they hadn't had the right sort of advice and structure from the beginning. So that's a very sort of brief background. We're already looking to set up chapters abroad, but most importantly of all, within Aureus Ventures, I have founded my own sort of personal project called Meek, which is called my educational entrepreneurial Kickstarter, which is a platform and community for entrepreneurs and startups, assisting them in their journey. And in a very brief sort of nutshell, it provides the entrepreneurs and the startups with all the sort of learning, advice, mentorship, and services that they need in order to conceive, build, develop, and scale their startup. The first sort of aspect of it is a digital learning, entrepreneurial learning program of 12 weeks long that enables schools and universities to provide them with an entrepreneurial society and the students with a learning program. And through one of my connections in South Africa, we've got 700 schools to launch it in when we're ready in about 6 months' time as a sort of beta launch. And then the other sort of aspects of the platform is it enables the students and entrepreneurs on the platform to find mentors and investors. It enables them to find service providers such as developers, creatives, accountants, and lawyers. It enables them to profile their business as well, and most importantly of all, what they're actually looking for their business, so people within the local area can connect with them and help them and become involved in their business. There's also a forum aspect of it. There's also a part of it where you can find entrepreneurial events and industry events relevant. I found when developing my startups that the industry events such as these were incredibly important and incredibly helpful. And then the final aspect of it is an investment raising platform to help the sort of startups and the entrepreneurs raise investment, whether it's right at the beginning or it's at the sort of later stages of it. So in a sort of very sort of brief nutshell, it's sort of creating a sort of LinkedIn straight Facebook style community for the early stage entrepreneurs and startups. And very important is how is this relevant towards the sort of fintech industry is that there are an incredible number of incredibly bright entrepreneurs and fintech startups out there who don't have the sort of tools and resources and the network available to be able to connect with others that could help them sort of really expand and grow and help them on their startup journey. So the Meet platform is very applicable to that part of the community, and it's one of the key sort of communities that we're actually looking at targeting. And I know Michael spoke about the sort of tokenization within the investment raising side of it for startups and the entrepreneurs. And one of the sort of key things and objectives that Meek wants to do is actually have people involved in investing in startups at a very early stage and be able to actually realize their value from it and not see the big sort of corporates eliminate it. So that's it sort of in a very, very brief nutshell for everyone.
Thanks, Sam. Wow, that's fascinating. Actually, it overlaps a lot with one of the projects that we've been venture building here in Malaysia called 1,000 Startups Initiative, which, especially now in the sort of post-COVID, or hopefully we are in the post-COVID era, the first vaccines just were given today, so maybe we're finally over the hill of the thing. But I think in the post-COVID recovery era, startups, investing into startups, creating funding pools for new technology companies is going to be very, very important, and doing that in scale so that it really can move the needle is something that we're very interested in doing ourselves here in our projects in Malaysia. Namir, I'll hand it over to you. He's the founding member of MENA Fintech Association. Please, sir, tell us a bit about your platform.
Thank you, Asad. Thank you very much. So I'm the chairman and also the founding board member of the MENA Fintech Association. And what we're currently doing, I'll just basically sum it up in a few sentences, is that we work very closely with all the 18 central banks across the region. Along with that, we work very closely with major fintechs of the region as well. And what we're doing over here is basically we're bridging the policy making side of the regulators with the innovators and the fintechs itself, and ensuring that we're able to create that strong blend, and to ensure that we're able to create a policy and an environment that is conducive for the overall fintech growth. And that, of course, comes in with different segments to it. That includes certainly on the side of community engagement, that's one part of it. But the primary thing that we have been able to do is to basically influence policy engagements, being able to influence regulations that support the existing players and the upcoming fintech players. And how we basically do and operate, we have different verticals like every other association in the world. But the different angle of the MENA FinTech Association is that we work with 18 central banks very closely. In fact, we recently launched an open banking report for the MENA region, which I would recommend you all to basically go through, which highlights the overall regional open banking perspective. And this is just an example of how we operate in terms of the overall collaboration. And most importantly, how we are able to engage different central banks, different jurisdictions, and bring them to a common page to ensure the overall fintech growth.
Excellent. Thank you. That brought us right back on time. And Namir, I have to give you full credit for being the most professionally dressed out of all of us on this digital conference. Michael, sorry, but I don't think you win this prize. So very interesting. I have a question for you later, Namir, that I think is very relevant for the type of ecosystem that you've just described. Good. So now we move on to Martin from, I believe, Zurich. Martin is the managing director of Smart Money Match. Martin, let's hear a little bit about what you're doing. You have your mute on, by the way, so you may want to remove that. Martin, you're still muted, sorry. So we need you to remove the mute so we can hear you.
Can you hear me now? Does it? You can hear me now? Hello?
Yes, please carry on. We can hear you now.
Yeah. Okay. Sorry. Yes. So basically, what we have is the web platform Smart Money Match, and it's for connecting the different stakeholders in the investment industry. For us, it's a little bit more regarding private equity and venture capital. So it's not purely startup. And what we have is that on the one side, the ones who offer can list the investments, they can classify them. The investors, they can search for investments, they can have some requests for proposals. Investors, they can people can search for investors. Investors can give their investment interests. Then there's also a category for service providers, that service providers, they can list services that they are offering. And yeah, then we also have an event calendar where we will actually also introduce an event platform very soon, and the job board, and people can basically mutually connect. We have a whole ecosystem for the investment industry, so that everyone can connect on Smart Money Match. And for fintech, we have the directory for fintech service providers. Yeah, so they can list the services that they have. Yeah, and so that's basically what we do.
Thank you, Martin. That was very efficient. Tony, you're next. Cranium Ventures, I'm all too familiar with it, and I kept you last because I know your tendency, if we give you the mic, you'll probably go on for the rest of the hour. So that's why I'm the moderator and you're the speaker. Carry on, please.
Well, that's a good way around. So Tony Horrell, a company called Uranium Ventures. We've been building companies mainly in the payments and more recently in the fintech space. But it started kind of interestingly, and it was, I guess, about 10 years ago that we sold our last company, which had grown to be the second largest payment software company in the world, with about 20% of the consumer payments market flowing through our technology. We'd installed in about 500 banks and about 40 countries at the national payments level. And after we sold that company, I did the usual thing, feeling like a burnout, bought a cabin by a lake outside of Stockholm and decided to write a book. And while I was writing the book, I came to the realization that most of the problems that we have today could be addressed with a very simple solution, which is actually to create, and crypto was just beginning at that point. But I had a small epiphany, which was to create a social payment network, which would be socially owned and socially governed, with asset-backed tokens in the areas of food, water, and energy that would be ethical and sustainable. And that truly was an epiphany. I've told Asad the story; it's quite funny. But basically, you know, while I was thinking about this, and I basically stopped writing my book at that point and became consumed by this idea. I realized that actually I was going to need a whole lot of technology that didn't exist today in the world, and a lot of money, which I didn't have enough of. So I figured that it would be quite easy to build a venture builder that would make use of a common technology platform. So myself and my former business partner from Aureus Technology, we designed over the course of 2 years a new type of payments and fintech microservices platform. We then embarked on a 5-year development with a team here in Kuala Lumpur and also in Canada, with the objective really of using this as the baseline platform to be able to support a series of new ventures in the payments and the fintech space, with the ultimate goal of Cranium Ventures to basically create a social non-profit organization. So we were built really to perform our CSR from the get-go. So Cranium has now developed, I think, about 5 million lines of microservices platform code. This has been fully tested and so on. And we're rolling out a series of subsidiary companies now, which are for-profit ventures, which address different components within the payment and fintech ecosystem. So basically, the 3 companies, there are 3 companies that we're working on right now, but we're already in the process of launching one of those companies, which is a fintech intermediation platform. One of the observations that I've made about the deployment of fintech is that it's actually very difficult for fintech companies to comply with a lot of regulatory requirements, especially around the areas of payments and trust and banking. So Unity Alliance, which we are in the process of launching right now in a country in Northern Asia, and in the process of pushing into another 5 Southeast Asian countries. It's really a fintech intermediation platform that allows for the provision of payment as a service, fintech as a service, and banking as a service. It provides the gateway, if you will, between fintechs and banks and payment companies. So the ability for a fintech company addressing the similar sort of problem that the card associations faced when they started to roll out, and how did payments become ubiquitous, was really because Visa and MasterCard created network effects. What I've noticed within fintech is that there are no network effects. So what Unity is aiming to address as our first subsidiary venture is really the ability to sign on a fintech in one country and to be able to provide those fintech services across multiple jurisdictions. So as I say, Unity is now rolling out in one country, another 5 countries in the back of it. It would be very interesting to discuss that further with some of you whose histories and backgrounds are very close to that. Thanks, Asad.
Excellent. Thank you, Tony. So that was very interesting to hear about what each of you are doing and how your platforms are sort of operating within this fintech ecosystem, which is in fact the topic for our session. I guess the theme is, how do we integrate all these disparate aspects between government, investment, the private sector into a fintech ecosystem so that it operates in a efficient way, and especially with the challenges of COVID. The whole theme of the summit really is how COVID has kind of created either a bottleneck or an accelerator into digital initiatives. So let's start off with a question. I think Namir would be perfect to answer this, given how he described that he's bringing all the elements of the ecosystem together on his platform. What are the big issues that you're seeing, Namir, in creating a fintech ecosystem to make it work? Where do you see, kind of the pull and push between the different participants and stakeholders in it?
I'll speak from the regional perspective of where we stand right now. Now, basically, in terms of the region and where we stand and how it's basically proceeding forward is in a couple of ways. Number one, the region is ripe. I mean, in our case, we have a huge population, 380 million people. Of course, we have large mobile phone penetration as well. We are starting at a financial inclusion rate of around 15%, insurance standing at 3.6%, which shows you that this region is actually ripe for, this is certainly a gold mine in terms of the global regions that are out there that are quite saturated. Now, the problem that comes in is going to be on the lines of, innovations are there, technologies are coming in. There's no lack of it. It's continuous. But however, the biggest impediment that you would find and see is going to be on the regulatory piece. Regulations need to be apt to be able to enable these fintechs to come and go. You can go and innovate, you can go and create new models, you can go and create new technologies, but by the end of the day, what happens is that you need to have a framework that lets these technologies operate legally, right? So that's where the regulations come into play. And for example, we have multiple players over here. Open banking is picking up. The reason why I'm talking about open banking right now is it's a hot topic at the moment in the region, certainly. But open banking or payments largely are only going to pick up when they are permitted by the local jurisdictions and by the local regulatory bodies, enabling those new models to operate. So, by far, there are so many of them, but by far, if I was to wait, the typical challenge that we will face at the moment is going to be the regulatory challenge. Second is going to be the talent side. Talent is a typical issue globally. You need more talent in the fintech space. Unfortunately, you do not have much talent coming in. And there's a mindset issue when it comes to talent, because a lot of employers, a lot of players, a lot of typically the incumbent players are still looking to hire from the traditional methods. However, when you're looking into these platforms such as the Karims of the region or Talabas of the region, they are recruiting people from different industries itself altogether, and then catering to the FS vertical itself, and of course having embedded fintech into this. So typically, these are three things that I would like to highlight. That would certainly create some level of challenges.
Thanks, Sumit. So my next question relates to, when I look at in my own experience in fintech and the work we've done in the last couple of years to create our own sort of functioning fintech ecosystem here. We had a project called Kuala Lumpur Tech City, which we designed and launched over the last year. And fintech was a prominent component of that initiative. But one of the challenges we found is how to interconnect, kind of the old fintech or the old legacy financial system into, I guess, the myriad of digital payment solutions and digital fintech solutions that are popping up on the other side. How we can create kind of a middleware or an infrastructure that allows those two communities to interoperate with each other in a seamless way. Given, Tony, that you've talked a bit about your Unity Alliance venture as part of Cranium's, kind of venture building initiatives, maybe this is something you can comment on, perhaps.
Yeah, absolutely. And it's an interesting problem, and it really is the perfect storm right now. What we see is sort of this collision right now in the payment space between the legacy payment methods, the credit and debit cards, the e-wallets, the cryptocurrencies with their crypto wallets, the faster payments initiatives through the open banking initiatives, as Namir was mentioning. And all of this is really creating, yes, I would agree, both a regulatory problem, but it's also creating an infrastructure problem, because 70% of payments today are actually processed on technology that was designed and built in the 1970s. All of these platforms have been created and rolled out at the national level and the bank level around the world, which essentially are brittle and incapable of actually adapting. Most of those payment technologies that are out there today were actually built pre-internet, pre-mobile, and they're being bolted onto. And it's really a very difficult environment that's being created. So yes, it's a regulatory problem. There needs to be regulation and new standards and so forth. But just relying on new standards and regulatory oversight really misses the point here. If we allow this thing to evolve, sort of layer onto itself, you're just building this incredibly complex environment. You've got, with all of these different payment systems, and they're all kind of flying around and past each other. No country's really actually figured this out yet. And we've spent a lot of time within our Unity platform also trying to figure out how to solve this problem. And the issue is really that you've got national payment switches where you have bank ATM networks or bank point of sale networks, and then you have all of the new payment methods, the avant-garde in terms of the crypto wallets, the national wallets. Here in Malaysia, we have 40 e-wallet licenses, and not one of them can talk to each other. We're creating this sort of Tower of Babel of problems in terms of payments because nothing is interoperable. And there is no entity that actually is looking at the problem. So what we see is the opportunity for governments to actually take the high ground on this potentially, and to create national payment grids to be able to provide those digital rails that provide instant interoperability, the ability to be able to pay in a fiat currency and transfer that to a cryptocurrency or vice versa. And we've been building a lot of that type of technology that allows for that interoperability, the ability to pay in one e-wallet and pay into another e-wallet, to receive a payment by a merchant on an online store with a credit card, but to settle with that merchant onto a digital token, for example. So that building of those digital payment railroad tracks we see as a really important component. And we're having a lot of discussions in various countries right now, including here in Malaysia, with the government, and actually saying, look, guys, you're missing an opportunity here. If you just apply regulations and allow the banks to build around those regulations, throw the problem to the fintechs to try and build into those regulations, you're not really making it an easy job for anybody. It's expensive, it's slow, it's complex, there's no oversight. Most of the governments that we're talking to are trying to address other issues, such as digital taxation, which actually can also be a benefit to the merchant in terms of reducing their complexity and so forth in terms of operating. So the national payments grid, as we call that initiative, we've taken that discussion to a number of countries, and those countries are actually very interested to do that because it gives them the ability to create new digital economy railroad tracks that allows them to launch and support new initiatives across the country. So I think, to summarize, I think what I'm seeing, unfortunately, in a lot of countries is that nobody's really talking to anybody else. You've got the regulators building regulations. You've got the banks being protectionist. You've got the fintechs trying to figure out how to navigate this sort of complex ecosystem. And everybody's sort of walking around each other and trying to figure out who's going to move first. I think that the solution here is actually there is a new opportunity right now at a national level, which is to create national payments infrastructure. That doesn't exist anywhere. There are companies that call themselves national switchers, but they're just switching ATM traffic between each other or point of sale traffic between each other. The card associations are also playing catch up. And as we saw with Visa and Plaid, they're being jammed up as well in terms of what they're trying to do. So I think that the opportunity also exists, of course, for innovative companies to go in and actually support that type of evolution. So yeah, it's a problem, but it's also an opportunity, and it's probably one of the baselines to building digital economies. Payments is, after all, the beginning or the start of every transaction. Thanks.
Thank you, Tony. Yeah, that's so. I've spent enough time listening to your ideas about how to create these, how to create kind of the middleware in fintech platforms to understand how disruptive that whole thing can be. But disruptive is a word that doesn't really recognize the opportunity that it will unleash and create by having that type of interoperability and systems that seamlessly speak to each other. I think the 1.0 systems that are operated by the banking system, the legacy banking system, I mean, they're well past their use-by date, and it's the sooner we get these type of platforms in place, the better. So thanks for that. The next question is a bit philosophical, actually, because we see that these 4 IR initiatives are being promoted around the world by various governments on a top-down basis. I think Japan famously has their Society 5.0 initiative. Dennis Guarda, who's the founder of Studium, which is the group organizing this summit, has been writing extensively on that. In fact, we'll be publishing a book on Society 5.0 and Society 5.0 as a global phenomenon. And Society 5.0, in its simplistic sense, I guess, puts technology at the society, at the center of technology rather than the other way around. And as technologies, 4IR technologies, become more powerful, AI, blockchain, etc., it's a way for essentially giving more democratic control of the technology to the last mile. Germany equivalently has, a really transformative program called Industry 4.0, which is kind of a preemptive way to ensure that their manufacturing economy can seamlessly move into the new technologies or can use the new technologies in a way that allows them to seamlessly move into the 4IR environment. Malaysia also, I think in our previous panel, we had the chairman of MDEC, Dr. Rais Hussain, talking about his Malaysia 5.0 initiative, which is kind of almost a blend of both the manufacturing sector or the hardware-based technology transformation as well as the software-based technology transformation of Japan's 5.0. So the question is really, what do you see governments doing in your marketplaces to, influence and progress the 4IR initiatives in a top-down way, and how effective is it? A place like Switzerland, I think, Martin, would be a very interesting environment to look at for something like this, because Switzerland is famously at the center, a neutral center of all of all of Europe, but also such an international kind of like crossroads. So what is Switzerland doing? What have you seen elsewhere that that show that these top-down initiatives that governments, a lot of them sound very nice, right? Like in terms of marketing speak, 5.0, society, industry, but how effective are they?
Yeah, actually, I think it's less top down. I think it's usually more bottom up. When I see in Switzerland, as an example, when Facebook announced its project with Libra, I think the financial authority in Switzerland, they were actually proud that Switzerland was chosen, and so they didn't want to miss the opportunity. I mean, when you have in Canton of Zug, what's also called Crypto Valley, yeah, there are lots of companies built it, but I think it's basically initially it was more kind of the marketing from the government that they said that they accept bitcoins for paying taxes, and so basically it's a very small effort for facilitating things like this, but to basically give the reputational purpose. What I think is much more important is also to know what are the basic problems, where are the huge costs, where are the huge frictions, and to overcome them. Because I mean, one thing is to have the technologies, and on the other side to have the problems, and then it's how to use what for what. Because I mean, it's not only in financial technology, also in other things where you have lots of possibilities, but you can't apply them because it's not, you don't have the real interface to use them. And I think that's something very crucial, that you actually start with the problem first, and then you see the solutions that you have or that you have to build to achieve that. And I think often it goes a little bit the other way, and also with the regulation that you see, we have now, and then you classify something like, as an example, blockchain payment, and then basically it's all almost already standardized, and then the regulator can come in. But often I think it has to be started the other way around, that the company proposes something and say, we want to facilitate something in this and this area, and then the regulator, if he's involved at all, because I mean, regulation per se is just costs. I mean, it can also increase reputation, but the regulator should basically, I think the job of the regulator is to reduce the hard hurdles as much as possible and to avoid giving too many obstacles. Yes, so, and I think it's much more from private, or to enhance the private initiatives. I mean, when you have the top-down initiatives from the government, I think it's usually very hard to achieve something like this.
Thank you, Martin. So I have a question for Michael, actually, because you just spent the last 5 or 6 months, I think, stuck in a hotel room in Dubai because of COVID, and and the travel restrictions. I believe you just got back to Bali a few weeks back, or maybe a week or two back. So COVID obviously is disrupting, future planning for projects, for investment, for companies. How has this affected you? I mean, we live in a digital world, so in theory, we have moved from the physical infrastructure to the digital infrastructure, and so we're not supposed to feel these bottlenecks anymore. But I mean, you're about the most digital person I know, right? I mean, you're at the cutting edge, the cold face of kind of digital innovation. How much has COVID really affected you, and what do you think some of the challenges are, or the opportunities are? I mean, about this unique period that we're living in right now.
Definitely, thanks, Asad. I have a super positive and optimistic outlook of the entire situation. I think what this year has brought is a huge amount of interest in technologies and innovation which were previously overlooked. So if you look in terms of for instance, the blockchain space, or if you look at online conferencing a year ago, if someone proposed organizing a conference like this online, people would have been a little bit maybe dismissive. Like I remember wanting to organize something like this late last year, and people were like, I much prefer a live event. And then March this year, we organized an event with over like 500 sessions and tens of thousands of people. So like this has been super interesting. Like the idea that people can work from home, and they never thought before that they could work from home. In terms of our projects, our marketplaces are growing extremely fast. I think this is thanks to people needing work, and basically people needing customers and wanting to sort of rebuild their business or look into alternative ways of financing, or ways to sort of drive marketing and clients. So I'm overly very positive and optimistic. We're also, as Asad mentioned, we're building a village or a community here in Bali, like with hundreds of apartments and villas, trying to create an ecosystem and an economy to sort of support innovators and entrepreneurs, and sort of like a test bed to showcase how we imagine the future economy and society to look like. I guess that's kind of a brief update. Asad, we've also launched like a master's program.
Actually, if I may jump in, I think that's something.
Yeah, please, Martin.
Yeah, please go ahead.
Yeah, sorry. Yeah, if I may jump in, I think it's very important basically to go from the market, what is required from the market, and see from the demand from the market to see the market potential. Yeah, that's basically just what you mentioned for Bali, and I think that's almost for each ecosystem very relevant, to not just build a technology that won't be used or won't be value added, to really have some value added things. Like as an example, when you talk about COVID and online conferencing, now it's very much in demand, and I think now it's something that is really required. And before, basically, you would have built it, but probably wouldn't have met a lot of demand for it.
Actually, if I could jump in there, that's a very good point. When we started our Unity project, we didn't really sort of understand exactly where it was going to contribute. And right now, we're actually working with an edtech company who actually are launching to potentially 10 million students in Pakistan. And we decided to open source the whole front end of the platform to allow those students to actually build their own fintech or other tech solution into the platform. So exactly what you're saying there, Martin, it's really about sort of finding ways to use the technology and use the business to be able to actually inject positive growth.
Yeah, I remember as an example, I was at the presentation from Google has a very big headquarters or a very big base in Zurich, and they made a presentation, and what they actually mentioned, and I think that's as an example also what we do with Smart Money Match. We see, first of all, we want to engage the customers, and basically the second question will be the monetization. We think when we have enough customers that are engaged with the product and are using it and get value added, then the monetization you can derive from that. But if you don't have the engaged customers for a product, you may say that the product is technically very advanced, but it's not very used. Then basically it doesn't help you a lot. But when you have the customers and they are engaged and you get the market for it, and then you basically can monetize it from there. I think that's usually for lots of things a way to go. I agree, it's not for all things, because for some things you need first the regulatory infrastructure or the technical infrastructure to roll out. So I mean, it depends on the project, but for lots of private projects, I think it can be done with this approach, that first you check the market and then you build it from the demand of the market, and the monetization is basically the afterthought. How do you do this?
Yeah, thank you, Martin. Thanks, gentlemen, for jumping in on that conversation. So we have about 5 minutes left in our session. I want to get Zan in here with a question that I think is very appropriate for him as a startup investor for Aureus Ventures. Zan, what do you think? What are you looking for as some of the USPs that fintech companies are the global fintech companies and startups are presenting? When you review the various opportunities that are presented to you, what stands out for you?
For me, the sort of key sort of things that I look at, and really what I think stands out, is a startup that's sort of really trying to sort of revolutionize the industry that they're in. And as Tony mentioned, a lot of the sort of platforms that the banks you use at the moment are still in the sort of 1970s and that period. So we're trying to sort of look at the sort of startups that actually will sort of create something new and will do it in a lot more sort of better and efficient way than is being currently done. And funnily enough, on this topic, I was having a conversation with a friend of mine who's recently been made head of digital strategy and platforms for UBS at a sort of incredibly young age. And one of the sort of things that really sort of brought out the sort of opportunity there was he was saying how many different independent projects were happening throughout UBS from a number of different parties, a number of different individuals, and there was no cohesion between any of the projects or anything that was happening, and no one was speaking to anyone else about it, and actually seeing how that data and what they were doing could actually work with someone else or work with another sort of part of it. And what it appeared was there was a huge amount of competition between the various people and the various initiatives within the department. And the second part that he said really stood out was there was actually a huge amount of resistance from the old school or the slightly sort of older generation of people who did not like this idea of modernization, doing things better, doing things more efficiently as well. So that's the other sort of key sort of USP that we're looking for is things that can sort of slot into other projects that also sort of really sort of spearheading the development, what they're doing, and as a whole create a lot more sort of efficient, economical ecosystem for everyone that actually wants to be able to use it. Most of all, us as a computer, like if as a customer, like if you think 10 years ago, the bank kept our money for 7 days before they paid us from a check, and it was absolutely crazy. And now it's sort of instantaneous. So that I think that for me is the main sort of USPs that we're looking for. And then second of all, obviously those that are being built on the blockchain and the whole sort of tokenization aspect of it again, which is again bringing in a sort of new generation of what money is and what it is perceived and how we transact, which, as we all know, in the sort of after the Second World War, a lot of people were bartering, and then we moved towards sort of checks, then we moved towards cash, and now I think we're very much moving towards a new form of transactory system, and that's probably partly being driven by governments as well, who are trying to tax us to a certain degree. So it's a sort of mix of competition between the two, of the governments wanting to take more money from us and us as a consumer and customer wanting to give them less money and creating new ways of transacting.
Fantastic. Well, gentlemen, I think that's it for our time. We had between 500 to 1,000 viewers during the course of this last hour, and I'm sure we'll have hundreds of thousands of viewers when it's posted online through all the media. So, this message will get out to a lot of people. I think that's fantastic. In many ways, these digital conference formats are far more efficient in a way, than sitting in one hotel room. Maybe not as enjoyable sometimes, but certainly very effective. Thank you very much for your time. Please, the audience, please do connect with the panel members via their LinkedIn and other social media. I think in their profiles you'll find online the links to their companies, and if you need me to provide that, my website is Sultan. I'm happy to connect you with any of the panel members. Thank you very much again, gentlemen. It was an enjoyable session, and have a good morning, afternoon, evening, depending on where you are. Goodbye.
Thanks a lot, everybody.
Brilliant, bye. Thank you very much, everyone. Great.
Okay, great.
Thank you.
Cheers.
Thank you very much indeed.
Thank you, Martin. Thank you very much to all our panelists and for everyone who joined us for views today at the conference. The next panel coming up in 15 minutes is moderated by Hilton Supra, and the topic for it is 4AR, how can cities and businesses can transform their infrastructure and supply chain with Society 5.0, AI, blockchain, and sustainability frameworks. We will be joined there by Professor Kiro Fernandez, who is Associate Professor at Durham, Dean at Durham University, UK, Michael Stanley Jones, Program Management Officer at United Nations Environment Programme, Rona Horrell, Founder and Director of Coco Airline Consulting, and Monika Kosiova, Director of Slovak Chamber of Commerce and Industry. This panel is very vital for us to understand how can cities and businesses can interact together with governments in order to provide better infrastructure for living, for citizens, and for nations. And as urbanization continues to drive global growth, cities are becoming more and more important to businesses and more independent with businesses. Collaborations between cities and businesses hold out promise of significant progress in improving long-term economic growth, resilience, and quality of life. PricewaterhouseCoopers House recently released a report where they provided different models for success of interaction between cities and governments. Each of these models is shaped by a local city context and businesses, but the models are fluid rather than sharply defined. One of those models is top-down city-led model. It has helped to fuel growth of different cities. It works best when certain key success factors are in place: clear, transparent, and consistent policy, planning by city authorities. It is ease of doing business with accessible and approachable government, careful navigation of conflicts between short-term businesses' interests and long-term city development, and channels for businesses to contribute strategic planning. The second model presented by PricewaterhouseCoopers is city-led convene model. This model is often seen in mature cities, in a sense of identities has a clear agenda, with those authorities who split between boroughs and districts and have limited powers in regulation, tax collection, and spending investment. In this model, authorities interact with businesses by convening businesses groups or using independent third-party groups. They typically consult businesses while defining their strategic agenda and cooperate with them on initiatives to drive it forward. The third and the most interesting and the most approachable model is business community-led model. Business to community means that in cities with a strong business present, but no consolidated cities authority, interactions can be driven by business community. The city might have a fragmented or localized authority, be subject to a strong regional or national authority, or lack mature infrastructure and independent investment or spending power. In such cases, chambers of commerce and other business groups can take the lead in setting the government agencies or issues from business conditions to a city broad long-term agenda. This approach can generate consensus and ownership or mitigate the effects of politics or changes in the government agendas. When city projects gain business buy-in from the start, They are more likely to secure private sector support with funding or further execution. The key success factors for the business community-led model include striking a balance between business interest and the city's strategic needs, as in between tactical needs and broader development strategy, a representative and unified business voice, a clear framework from authorities. In conclusion, I would like to add that different models of interactions between cities and businesses range across a broad spectrum. The right model for a given city will be shaped by its circumstances, but even within one or another city model, businesses with different priorities and philosophies on the role of business and community may interact with the city in different ways. Cities and businesses pursuing one model may also identify needs and challenges best addressed by borrowing mechanism from a different model or shifting to a model entirely. More on this topic we will have from our panelists in 5 minutes. Meanwhile, I will show us a short film created by Studium Group and Dinis Guarda on smart cities and society 5.0. This was a short part of our film that you can watch live on Dinis Guarda YouTube channel. And now we are switching for our next panel. See you soon.